Surprise! All right, let's get real for a second. When you look at your paycheck, you see that chunk of money vanish into the abyss labeled taxes, and you probably think, wow, the government is taking like 30% of my soul. But what if I told you that what you actually pay is probably way less than you think? It's true. The whole system is designed with so many layers, loopholes, and weird rules that your tax rate is more of a suggestion than a hard fact. It's like the price on a new car. Nobody actually pays the sticker price, right? We're about to peel back the curtain on this whole financial magic show. So what even are taxes? Think of them as a subscription fee for living in a civilized society. Seriously, that money you pay, begrudgingly I know, is what paves the roads you drive on to get your late-night tacos. It funds the schools that hopefully teach kids not to eat Tide Pods. It pays for firefighters who show up when you try that one recipe from TikTok and nearly burn down your apartment. It's the collective pot we all chip into to keep the country running, from national parks to the military. It's the price of admission for a functioning society, even when it feels like a really, really expensive concert ticket for a band you only kind of like. Now, not all taxes are created equal. They come in different flavors, like a weird mandatory Baskin-Robbins. You've got the big ones that hit you from all angles. There's the tax on what you earn, the tax on what you buy, and even a tax on the stuff you own. Each one is a different character in this epic drama called your financial life. Understanding them is the first step to not getting played. Because if you don't know the rules of the game, you're not just playing it, you're getting played by it. And trust me, Uncle Sam has been playing this game for a long, long time. First up, the heavyweight champion of taxes, income tax. This is the one that takes a bite out of your paycheck before you even get to smell it. The federal government and most states look at how much you make in a year and say, nice, we'll take some of that, thanks. It's the most famous tax, the Beyoncé of the tax world. But it's not just from your 9-to-5 job. Did you win some money on a game show? Get a freelance gig walking your neighbor's iguana? That's all income, baby. And the government wants its piece of the iguana walking pie. It's the price of earning. Next in the lineup is sales tax. This one is the sneaky ninja of taxes. You don't see it on your paycheck, but it gets you every time you buy something. That latte, those new sneakers, the 50-pack of batteries you swear you'll use one day. Bam, sales tax. It's a percentage added to the price tag at the register. And here's the wild part. It's different everywhere. You could be paying 7% in one state and zip zero, nada in another. It's the government's way of getting a little taste of your shopping habit. It's a consumption tax, meaning the more you buy, the more you pay. It's their cut for letting you participate in the glorious world of commerce. Finally, we have property tax. If you own a home or land, congratulations, you've unlocked a new level of taxation. This is a tax you pay to your local government, your city or county, based on the value of the property you own. This money is super local. It's what usually pays for your kid's public school, the local library where you print your concert tickets, and the police officers who give you parking tickets. It's a wealth tax, in a way. The more valuable your property, the more you contribute to your immediate community's upkeep. So when you complain about a pothole on your street, you're basically complaining about how your own money is being spent. So there you have it, the big three. Income tax is on what you earn, sales tax is on what you spend, and property tax is on what you own. They're like a trio of financial frenemies who are always around, whether you like it or not. Each one works differently, is collected by different levels of government, and funds different things. Knowing the difference is crucial because it helps you see the full picture of your financial life. It's not just one big monster, it's three smaller, slightly less scary monsters that you can totally learn to outsmart. Okay, now let's get into the nitty-gritty of income tax, because this is where people get really confused. You've heard the term tax bracket, right? A lot of people think if they're in the 22% tax bracket, their entire income gets taxed at 22%. That is, and I cannot stress this enough, not how it works. I repeat, not how it works. Thinking that is like thinking the entire pizza is just crust. The US has a progressive tax system, which is a fancy way of saying it's tiered. You pay different rates on different parts of your income. It's a ladder, not a flat fee. Let's break it down with a super simple example. Imagine there are only two tax brackets for 2025. The first bracket is 10% on income up to $10,000. The second bracket is 20% on any income over $10,000. Now let's say you earn $12,000 this year. You don't just pay 20% on the whole $12,000. That would be $2,400. No, that's the scary monster version. Instead, you pay the tax in chunks. The first $10,000 of your income is taxed at the lower rate of 10%. That's $1,000. See? Easy. Now what about the rest of your money? You made $12,000 and we've already dealt with the first $10,000. So you only have $2,000 left that falls into the next bracket. That remaining $2,000 is the only part of your income that gets taxed at the higher 20% rate. So 20% of $2,000 is $400. Now you just add the two amounts together. You've got the $1,000 from the first bracket and the $400 from the second bracket. Your total tax bill is $1,400. That's it. Your effective tax rate is actually around 11.7%, not 20%. See? It's not as bad as it sounds. This marginal system is the core of how federal income taxes are calculated. Sure, in reality, there are more brackets with different numbers, but the principle is exactly the same. Each dollar you earn fills up the lowest bracket first, then spills over into the next one, and so on. This is why getting a raise that bumps you into a new tax bracket is almost always a good thing. You don't lose money. Only the new dollars you earn above the old bracket's limit get taxed at the slightly higher rate. It's a fundamental concept that, once you get it, makes the whole system feel way less terrifying. So, we figured out how your tax is calculated. But wait, there's more. Before the government even starts calculating, you get to lower your taxable income. This is where the magic happens, folks. This is where you use deductions. But first, a quick fun fact. Did you know the U.S. income tax was first introduced to fund the Civil War in 1861? It was repealed and brought back a few times before it became permanent in 1913 with the 16th Amendment. So yeah, you can thank Abraham Lincoln, kind of. Now back to saving you money. What is a deduction? It's an expense that the IRS lets you subtract from your total income to make your taxable income smaller. A smaller taxable income means a smaller tax bill. It's that simple. There are two ways to do this. You can take the standard deduction, which is a fixed dollar amount that anyone can take, no questions asked. For 2025, it's a set amount that changes slightly each year. It's the easy button. Or you can itemize your deductions, which means you add up a list of specific eligible expenses. You only do this if your itemized list adds up to more than the standard deduction. So what kind of things can you deduct? There are tons of them. If you itemize, you might be able to deduct the interest you paid on your mortgage. You can deduct contributions you made to charity. So being a good person can literally pay off. You might be able to deduct some state and local taxes you've already paid. If you have huge medical bills, a portion of those could be deductible too. And for all my self-employed hustlers out there, you can deduct business expenses like a portion of your home office, supplies, and even miles you drive for work. These are the cheat codes the IRS gives you. Use them. Now, for the easy tips to survive tax season. First, get organized. Don't be that person digging through a shoebox of crumpled receipts on April 14th. Throughout the year, keep a folder. A digital one works great for all your important documents. Pay stubs, W-2s, 1099s, and receipts for any potential deductions. Second, don't wait until the last minute. Filing early means you get your refund sooner if you're owed one, and you have more time to figure things out if you owe. And finally, the biggest mistake people make? Simple math errors or typos. Double-check your social security number. Seriously, a simple mistake can delay your refund for months. Let's bring it all home. We started with the big, scary idea of taxes and peeled it back layer by layer. We learned that what you actually pay is based on a progressive bracketed system, not some flat rate that robs you blind. Your tax bill isn't based on your total income, it's based on your taxable income, which is a number you have the power to lower. You now know that taxes are just a subscription fee for living in a country with roads and firefighters, and they come in three main flavors: income, sales, and property. It's not a monster under your bed, it's just a complex system. We've also unlocked the power of deductions, the government-approved cheat codes to shrink your tax bill. Whether you take the super simple standard deduction or you itemize your expenses like a pro, you are in control. You can lower the amount of your hard-earned money that gets taxed by tracking things like charitable donations, mortgage interest, or business expenses. This knowledge is power. It's the difference between letting your finances happen to you and taking charge of them. You don't have to love taxes, nobody does, but you don't have to fear them either. The key takeaways for surviving tax season are simple. Be organized, don't procrastinate, and double-check your work. You are more than capable of handling this. It's just paperwork. Ultimately, understanding taxes is a huge part of being financially literate. It's about making smart choices with your money all year round, not just in April. Knowing how the system works empowers you to plan better, save more, and build the life you want. So today, make a promise to yourself to not be intimidated by this stuff anymore. You've got the basics down, you know the rules of the game. Now go out there and play it to win. You got this.